Everyone has to live somewhere, and everyone has to invest their money someplace. So what happens when where you live meets up with where your money is invested? Hello, real estate. Hey, welcome back to Big Money Real Estate. I'm Elise Link. Here's your daily update. So I got a comment recently on Twitter from a viewer who wanted me to talk about investing in notes, which can be a very useful real estate investing strategy, right? Particularly when large numbers of loans are in default. Real estate notes, paper, debt, it's all good stuff, but you got to really understand it. So regardless of what you call these things, I'm talking about buying mortgages from a bank or other financial institution so that in most cases, you actually own the lien on a piece of property when you buy the note. So there are, of course, advantages, and then there are disadvantages, risks and rewards to investing in notes. So I invited real estate blogger Joel Cohn, who's written about investing in notes for U.S. News and World Report, to come back on the show to share what he's learned. Since his last visit, he attended some note investing seminars and is investing in notes himself, which is perfect. Hey, Joel, welcome back to Big Money Real Estate.
Thanks, Elise. How are you doing?
I'm good, thank you. You?
Okay, I'm just getting started. I'm a newbie investor in the note market, so I go into these seminars and so forth to learn, so that I'm educated in it before, like anything else, before I get started in it. I don't want to be putting my money out there without knowing exactly what I'm doing and networking with other investors who are doing the same thing.
One of the things that I think is really interesting is that you're actually teaching yourself and going through this process. And I always believe that if you can't turn around and tell a 10-year-old how to invest in what you're trying to invest in, you don't understand it nearly well enough to begin to do this. So how is it that you decided to buy notes, to begin buying notes, and where are you beginning the process? Where should other people begin?
Well, I started investing in rental properties for a while, and dealing with the brick and mortar real estate is difficult at times. And now that I'm working from home, I like the idea of working out of my home and not having to do a lot of travel. So I looked around, went to my investing group. I asked people, talked to people, listened to different speakers when I was going to real estate and investing expos and things of that sort. And notes seemed to be attractive to me. So because it's something that you can do from home, and you can basically invest in all over the country. But like anything else, you really need to be educated up front.
How do you know what's a good note and a bad note?
Well, you have to do your homework. Like with any investing, you have to do due diligence, and can be a little more complicated with notes because you are the bank, and you want to make sure that when you buy the notes, you want to make sure that you take a look at all the financials. You look at all the everything from the property condition to tax liens. There's a laundry list of things that you have to do in due diligence in order to do your homework before you decide whether a note is worth investing in or not. There are high cost notes. There are what they call low value notes, depending on the market you're in. So you really need to spend time. Have things like realtors doing drive-bys for you, shooting pictures for you. You go on the internet, you can look at properties from the outside using Google and so forth. But it's nothing quite like having boots on the ground, actually looking at the property. There's so many different things here to go through.
So you're acting as, just to be really clear, the bank in the transaction. So a buyer would come to you, or the buyer would get a mortgage and then you're going to buy that mortgage from the lender. Where are you actually providing value?
Well, right now I'm just starting out. I'm not doing any of that yet. But what I am doing is I'm going through a mentor program with a very experienced investor and learning about these things. Now, there's two ways to invest in notes. You can be a passive investor or you can be an active investor. If you want to be a passive investor, then basically you find somebody who has notes to invest in and you put your money up and do a joint venture with them and sit back and hopefully it pays off in the end and you either get share in the rent money that's coming in if you get the note reperforming, or you when it sells, you share 50-50 in the profit made from the sale of the home afterwards if you have to go to foreclosure. Being an active investor means you're actually going out, you're going to banks, hedge funds, private equity firms, and actively seeking out the notes yourself doing the due diligence, making the offer to buy the note, and and then you have a servicer to service the note. If the property is out of state, you're going to probably have a realtor in that city that can take a look at it. You get property management. There's a lot of other factors that go into investing in notes. It's not just, okay, let's find a note and buy it and see and collect the money at the end of it.
What is your ROI perspective? What are you thinking about when interest rates are so low? Truly, it's higher than what you can get putting your money in savings, but there is a risk reward assessment that you have to make. So
Sure.
what is that for you, and what does the ROI look like?
Well, the ROI, most of the investors I talk to, I mean, at minimum, they're looking at 15 to 18% ROI. A lot of times, depending on the note, depending on whether it pays off, whether it becomes reperforming or not, they can make as much as 30 or 40% ROI on a note. Every note's individual. It depends on circumstances and the exit strategies you have to use, whether you are doing a loan modification on it, or you have to eventually foreclose on it and sell the property, or keep it as rental property. So the ROI can vary, but I mean, I've heard anywhere from 15, 18% at a minimum to 30, 40, maybe 50%, depending on how the deal works out in the end.
Do you have any trepidation about going to these seminars? Because I got to tell you, my experience over the years has been that when you get invited to a free seminar that's going to teach you how to make gazillions of dollars in real estate, they're typically not really worth the price of admission.
True, and that's why you have to go to a lot of them. You have to talk to other investors. That's why I think it's very important that you join a investors club, so that you're out with other investors who are experienced, whether it's in notes or buying rental properties or flipping. Having the sage advice of people who have been doing in the business for years. Because like you said, you go to some of these investors expos, like I used to go to all the time when I was working with Realty Track, and they're talking about investing in apartments, they're talking about investing in mobile home parks.
Everything,
I
right?
mean, it all sounds terrific.
Yeah.
At the end of the day, I mean, you can spend thousands and thousands of dollars for these things and never get involved in anything, and just feel like you've been taken. So yeah, it's hard, and you have to really do your homework, and you have to feel confident in the person that you're working with that's going to pay off for you.
So what is your time frame for making your first investment in a note?
Well, I just got done putting together my self-directed IRA. So what I'm going to do is I'm going to use those retirement funds to buy some low-value notes. I'm probably going to joint venture with a couple of investors who are here in Orange County, California, where I live, and they're experienced investors who've been doing it for quite a while, and I'm probably going to do that probably in the next couple of weeks. I sit down with them and buy a note or two and see how it goes from there.
Dip your toe in. Well, you know what? We're going to check back with you in a couple of months and see how it's all working out.
Sounds good.
All right. Joel is a freelance real estate writer, blogger, and investor in notes and in real estate. Joel, thanks for being with us.
Thanks, Elise. Appreciate it.
Hey, and thank you for watching this episode of Big Money Real Estate. Send me your real estate investing and personal finance questions on Twitter and Facebook. You can also link into me at LinkedIn, and be sure to share this video all the way around. Until next time, I'm Elise Glink.